Michael Burry, the man who predicted the 2008 housing crash, shorted Wall Street's biggest banks, and walked away with millions while the world burned. And now in 2025, he's back with another move that's shocking investors across the globe. Scion Asset Management, Burry's hedge fund, just revealed its latest 13F filing with the SEC. And what it shows is nothing short of stunning. From dumping Nvidia, Wall Street's golden child, to piling into beaten-down companies like Lululemon, Burry is once again zigging while everyone else zags. So what exactly is he betting on? And what can we learn from his shocking new portfolio shift? Let's break it all down. Just 1 quarter ago, in early 2025, Burry stunned investors by holding a single stock, Estée Lauder Companies. That kind of concentration had Wall Street scratching its head. But now, he sold off 25% of that stake and used the cash to build an entirely new portfolio. Today, Scion holds 5 stocks. 4 of them are down anywhere from 20% to 50% this year. The 5th, up more than 30%. It's a bold shift, betting on companies the market has abandoned while sprinkling in just a taste of growth. It's the perfect example of Burry's philosophy. The best gains don't come from following the herd. They come from being early. Stock 1, Lululemon, ticker symbol LULU. Let's start with the biggest surprise. Lululemon Athletica, this premium athletic wear giant, beloved by loyal customers around the world, has been crushed this year. Rising tariffs on Vietnam and China, slowing consumer spending, and weak retail sentiment have all hammered the stock. But that's exactly why Burry jumped in. Lululemon's fundamentals remain strong. High-margin products, a cult-like customer base, and powerful international growth. In China alone, revenue grew over 20% last quarter. The company holds $1.3 billion in cash, generates strong free cash flow, and continues expanding globally, all while buying back shares. To Burry, this is a textbook case of short-term pain creating long-term opportunity. Stock 2, Bruker Corporation. Next is a company most retail investors have never even heard of, Bruker Corporation. Bruker is a leader in life sciences equipment, famous for its nuclear magnetic resonance machines, which can cost over $10 million each. That kind of dominance creates a serious competitive moat, but the stock has slumped nearly 20%. Why? Budget cuts to academic research, rising costs, and weaker margins. Here's the catch. Bruker is diversifying into consumables and reagents, products that bring recurring revenue. It's also cutting costs and integrating new acquisitions. If funding stabilizes, its leadership in high-end life sciences technology could spark a major rebound. Once again, Burry is betting on a turnaround, while most investors run for the exits. Stock 3, Regeneron Pharmaceuticals. Then comes Regeneron. For years, Regeneron dominated the eye care market with its blockbuster drug Eylea. But now, that dominance is slipping as Roche's Vabysmo and other biosimilars eat into sales. Investors punish the stock, but Burry sees the bigger picture. Regeneron's real growth engine is Dupixent, an immunology treatment developed with Sanofi. Sales surged 22% last quarter, reaching a $17 billion annual run rate. Add in cancer drug Libtayo, new treatments in multiple myeloma, and even obesity drugs in development, and you've got a pipeline that Wall Street is ignoring. With $17 billion in cash and almost no debt, Regeneron has the firepower to weather Eylea's decline and fuel its next stage of growth. Stock 4. Now let's talk about what many call the Amazon of Latin America, Mercado Libre. But this isn't just an e-commerce story. Mercado Libre has built a powerful fintech ecosystem through Mercado Pago, handling payments, credit, and investments for millions across the region. Revenue soared 34% year-over-year last quarter to $6.8 billion. Argentina alone surged 75%. The company is aggressively spending on free shipping and marketing, which is pressuring margins, but management sees this as a lever it can pull back when needed. And the fintech side? It's exploding. Credit revenue reached $1.3 billion, and total payment volume climbed 31%. In a region with fast-rising internet adoption and limited access to traditional banking, Mercado Libre is positioning itself as both Amazon and PayPal rolled into one. For Burry, this isn't just a stock. It's a bet on the future of an entire continent. Stock 5, UnitedHealth Group. Finally, we come to UnitedHealth Group. This healthcare giant has faced a storm of bad news. Its CEO suddenly resigned in May 2025. the Department of Justice is investigating potential Medicare fraud. Rising Medicare Advantage costs are squeezing margins, and policy changes are creating uncertainty. The result? The stock tanked. But here's the twist. Even through all this, UnitedHealth raised its dividend again 5.2%. That confidence speaks volumes. With unmatched scale in insurance, pharmacy, and care delivery, UnitedHealth generates enormous recurring cash flows. Today, shares trade at a discount to peers and to their own history. For Burry, that screams contrarian opportunity. So let's step back. While the S&P 500 hovers near record highs, Burry is targeting companies the market has left for dead. From retail to biotech, fintech to healthcare, he's building a portfolio designed for asymmetric upside. Will it work? No one can say for sure. Even Michael Burry has had missteps. But if history tells us anything, when Burry makes a bold bet, the world pays attention. So what do you think? Are these 5 stocks the start of his next legendary call, or just another contrarian gamble? Drop your thoughts in the comments below, and don't forget to subscribe for more deep dives into the moves of the world's most fascinating investors.